Hello and welcome again to my show, Searching for Integrity. My name really is John Smith, and I'm searching for people with integrity. Why? Because our country suffers from IDD, integrity deficit disorder. Today, we have a session for economics, and what we're asking about ourselves are making decisions about the economy, but we're talking about the part of the economy where it's real estate, mortgages, it's homes. Do we sell it now, or do we keep it now? Do we rent it or do we sell it? These are some of the things that we're going to touch upon today. I'm going to begin with an item. It says the home sales fell in March as mortgage rates weighed on the market. Home prices declined 0.9% from a year earlier to 375,700. That's a declining number. We have lots of information here. Sales of previously owned home fell in March from the prior month as higher mortgage rates slowed buying activity. Makes it much, much harder if you have to deal with a higher mortgage rate. U.S. existing home sales, which make most of the housing market, fell 2.4% in March from the prior month as a seasonally adjusted annual rate of 4.44 million. The National Association of Realtors said Thursday March sales fell 22% from a year earlier. The U.S. housing market has slowly dramatically in the past year as rising mortgage rates, high home prices, and persistently low inventory frustrated buyers and pushed many of them out of the market. That's what generally happens. They can't deal with it as it is. And it's not like it was. That's the reason. A cooling economy with stubbornly high inflation and many economists forecasting and recession in the next 12 months is keeping some buyers on the sidelines. Consumers also borrowed less following the collapse last month of Silicon Valley Bank and Signature Bank, a Federal Reserve report said Wednesday. If you'll recall, just a week to 10 days ago, we had critical thinking taking all the energy from us, because those that are waiting and those when they're not getting any answers anymore. And it's worse whenever the banks are having difficulty. Mortgage rates have fluctuated in recent months since hitting 20 years above 7% in October and November. The average rate for a 30-year mixed mortgage, 6.27 in the week April 13, up from 5% a year earlier, according to Freddie Mac. Federal Reserve has raised its benchmark federal funds rate 9 times since the start of 2022 in an effort to tame inflation. That's a big move right there. 30-year mortgage, 6.27%. I can remember not too long ago, mortgages for instance, with my VA discount, the interest rates, mortgage rates were 2.5% to 3%. And now you're looking at more than that, 7%. The slowdown in homes is weighing on prices, especially in the western half of the U.S. The national median existing Home price fell 0.9% in March from a year earlier to 335,700. The biggest year-over-year price decline since January 2012. Median prices, which aren't seasonally adjusted, were down 9.2% from a record 413,800. That was in June. U.S. median existing home prices changed for a year earlier. National Association of Realtors note, March 23 data is preliminary. Consumer appears to be very sensitive to changes in a week-to-week mortgage rates. And the chief economist almost appears that people are just waiting for the right time, rate before deciding or closing. Economists surveyed by the Wall Street Journal ahead of the release and estimated that sales of previously owned homes fell 2% in March from the prior month. That's the March we just had. The labor market has cooled some, but remains solid. More workers have filed for unemployment benefits this year, likely a reflection of layoffs in technology, finance, and real estate. Worker filings for initial jobless claims, a proxy for layoffs, increased by 5,000 to a seasonally adjusted 245,000 last week, the Labor Department said Thursday in a separate report. Last week's reading was just below the highest level in 2023 and above the 2019 average of 220,000. So that's the first idea of what you're going to get a touch of today. Home sales fell. They're selling unless people are having pay with cash. You don't need a mortgage if you have. Okay, here's some more info for us. If you are serious about selling your home now, don't get greedy with the asking price. This is good advice. This is still a seller's home market, as there simply aren't enough affordable homes for sale in many parts of the country. But with average 30-year mortgage rates above 600%, buyers are much more price sensitive than they were a year ago. Agents and brokers say price is the most important thing for sellers to worry about right now. Pricing is too high a year ago and often didn't backfire as prices were surging broadly. Doing that now could scare off many buyers in vastly different markets. Agents and housing economists say homeowners trying to sell now need to accept they are probably not going to get the same price their neighbor did early last year, when mortgage rates were hovering around 3%. Lower mortgage rate makes it easier for a buyer. About 25% of homes sold about list price in December 2022, compared with 44% of homes during the pandemic frenzy the year before in December 21, according to Zillow. Sellers can take heart that more homes are going for above asking than this time of year in 2018 and 2019. It's not the same type of seller's market we saw in 2020 and 2021, where home sellers could list this home at almost any price and count on a bidding war. One of the senior economists of Zillow You couldn't go to a place or to a home and become part of an audience bidding. And I did that 2 times, 3 times, and we decided we didn't want to do that anymore because something that was reasonable, let's say, for instance, something reasonable of 400,000, and then we thought that a little bit of increase would be okay, raise it up to 420,000, but instead what you found, you saw people from, for instance, here's the problem. California people came into Arizona, and they were the people that were driving up the prices on the bids. For instance, that $400,000 house, they would easily put out $500,000 and $550,000, and everybody else in there just kind of, the jaws dropped, and hopefully that's now gone away, and people have controlled themselves in terms of when people comes in with their big high guns, like the Californians, you just stay away. At one point, that started happening. Nevertheless, a little tidbit of what goes on. Recently, went on a listing appointment with a seller who remodeled their home with dark color materials, including wood and stone. The seller, who was from the Northeast, thought the Florida property was worth more than comparable homes. The only problem, many Florida buyers prefer a light and bright home, said this seller, and darker homes often sit on the market longer, and ones with a coastal look sell for 200,000 to 300,000 more, she was quoted. When overpricing backfires, setting a high price for your home and waiting for buyers to negotiate is a mistake some sellers are making now, especially those with waterfront properties. Startling high and waiting for an offer often doesn't work today, as buyers are often frustrated with their past pandemic, I butchered that, post-pandemic home search and working with smaller budgets. They typically don't want to spend time trying to gauge how negotiable the seller is, she said. What are your primary considerations as you prepare to sell your home this spring? It is important to price a home correctly when first listed, as the longer a home stays on the market, the steeper the price cuts typically become. Real estate agents said, of all homes sold within 30 days so far in 2023, the average discount was 7%. Homes on the market over 120 days sold with 16% off list price. Pricing at or below market is key, as real estate agents agree. There's not a lot of inventory, so if priced right, you'll create buzz and potentially a couple of offers. Another reason to be more measured with asking prices is that more homes are going on the market. There are 980,000 homes for sale or under contract across the country at the end of January, up 2.1% from December and up 15.3% from January 2022. There are steps sellers can take to improve their chances this spring, in addition to the standard advice to clean, declutter, and make certain repairs. When it comes to price, there is a fair bit of homework to do. Here's how to get started. All asking prices are local. The key factor in home prices is location. In January, most of the 150 metro areas Realtor.com tracks had yearly price increases, while 22 had declines, and prices were flat in 7. Sellers are faring best in the middle and lower priced slices of the housing market. In areas where homes priced below 350,000, prices declined 1.6% during the second half of the last year. For areas with a median prices above 400,000, prices dropped 4 to 10%. Big difference. Buyers place an even higher premium on homes nearby amenities, such as quick access to public transportation, public spaces and retail stores. Find Institute's Global Real Estate Finance. Highlight in your listing what is the easy reach of your home, he said. How to sell a house while the market is still favorable. It might pay to wait. Regardless of location, sellers might want to wait until later in the selling season to list. The 5 days when sellers around the country received the best premium over their asking price were during the 3rd and 4th weeks of May, according to a 2022 Adams study that analyzed home sales from 2011 to 2021. That's a 10-day area. May 23 is the most profitable date, commanding 18.3% above market price. The months with the greatest seller premiums are May, 12.6%, June, 10.7%, July, 10%, April, 9.2%, and March, 8.9%. Very interesting. Very interesting. And people were lined up. I don't see the lines anymore. I think that people are careful. If they are trying to get their house sold, they had it what the old price was, and that's long gone. Let's see, here's another item specifically on mortgage rates. Hit 5% for first time since 2011. Woohoo. The monthly cost of buying a typical home has surged by more than a third over the past year by one estimate, yet demand remains robust. U.S. houses earned more than American workers in 2021. Here's why. Play video. U.S. houses earned more than American workers in 2021. Here's why. Related video. The average U.S. home earned more last year than the average American worker. Prices for homes, groceries, and gas are rising faster than Americans' wages, and they may be why sentiment and confidence have been so low recently. The interest rate on Americans' most popular mortgage hits 5% for the first time in more than a decade. Long time. Groceries and gas are rising faster than Americans' wages, and they may be why sentiment and confidence have been so low recently. The interest rate on America's most popular mortgage hit 5% for the first time in more than a decade, extending a sharp rise that has yet to significantly slow the red-hot housing market. Interest on the average 30-year fixed-rate mortgage climbed from 4.72% a week ago to its highest level since early 2011. Government mortgage company Freddie Mac said Thursday, 15 months ago, mortgage rates were at all-time lows. And they were. I was thinking about selling a house and decided it was not going to be in the right thing to do. And we waited. Let's see, rates fastest 3-month increase since 1987 has made the housing market ground zero for the Federal Reserve's efforts to tame inflation. Home buyers already facing surging housing prices are now contending with a substantial increase in financing expenses, further lifting monthly payments. A year ago, buying the median American home at prevailing rates meant a monthly mortgage bill of about $1,223 after a 20% down payment, according to calculations. Economists at Realtor.com. At recent rates, such a purchase would require a monthly payment of nearly $1,700, a 38% increase is what he had estimated. News Corp, parent of the Wall Street Journal, operates Realtor.com. And I didn't know that. I was a realtor for a while. Even compared with searing inflation elsewhere in the economy, that accounts as extraordinary price growth. It also strikes at the bedrock of many families' finances. Most Americans who buy a home are, in a sense, making the biggest purchase of their lives. Some hopeful homeowners are paying more upfront to sidestep higher rates. The home Sam Skinner is having built in Delaware is set to be completed in the middle of the summer. In late February, he decided to pay $6,000 to lock in a rate of 3.875% with Wells Fargo to avoid being stuck with what he believed would be notably higher interest rate in July or August. Yes, that's being done. And new builders are in same situation. They'll take their sales price and then they'll grant 5% off of it. Some hopeful homeowners are paying more upfront to sidestep the higher rates. The home Sam Skinner is having built in Delaware is set to be completed in the middle of the summer. In late February, he decided to pay about $6,000 to get a rate of 3.875. That's pretty good. And over a long-term basis, that's really good. He wants to avoid being stuck with what he believed would be notably higher interest rate in July or August. And that's coming up, ladies and gentlemen. That's coming up. I'm very risk-averse person, so no way was I going to sit here stressing about rates while the house is being built. Note, not knowing how much our payments would be. Though rising rates have made buying more expensive, the housing market has remained tight and still has. Interest rates are rising elsewhere in the economy too, lifted by Fed's plans to raise benchmark overnight lending costs and draw down its support for bond markets. In doing so, the Fed aims to bring demand into balance with supply, chilling upward pressure on prices. The central bank is responding to inflation that has now reached its highest pace in 4 decades, the government said. Tuesday, March's consumer price index rose 8.5% year over year as costs soared for energy, food, and airfare. With unemployment nearly back to pre-pandemic levels, close to all-time highs, Fed officials have called fighting inflation their priority. As the bank's policy shifts, most of the fallout plays are out from the view of everyday people, far from the view, such as though higher financing costs for corporations and muted investment incentives for money managers, rising mortgage rates, on the other hand, literally hit home. Financing property was cheap, and for much of the pandemic, the 30-year rate was 3% for more than half of 2021. In January of that year, it had hit an all-time low of 2.65. Those rates helped fuel the biggest boom in sales of previously owned homes since 2006. Freed by remote work and lured by inexpensive financing, families left apartments in New York, San Francisco, and other metropolises for more spacious suburban houses. Growing ranks of millennials, many started families and entered the primary home buying years, joined the crowd of bidders too. Now, bankers and economists say that pricier mortgages are cooling the market. Mortgage Banker Association Index tracking the volume of loan applications for home buying was down 6% this week from a year earlier, trade group said Wednesday. Wells Fargo, which issued more mortgages than any other U.S. bank in 2021, said Thursday that mortgage originations fell 27% from a year ago. JP Morgan Chase, another big home lender, reported Wednesday that its mortgage origination dropped 37%. That's a big drop. Or if you're a lender, that's a big drop. Refinancings have crashed as higher rates cut the share of homeowners who can save money with a fresh mortgage. The MBA's index for refinancing volume is now down 62% from a year ago. Across all mortgage types, the group's economists project originations will fall 36% this year to 2.58 trillion. Not very good for a lender. People shopping for homes are seeing their budgets upended, especially first-time buyers. Higher mortgage rates have also practically eliminated refinancing activity among the firm's clients. I've definitely had some borrowers see the rate and be like, whoa, we need to talk. As rates rise, the local real estate market is showing signs of cooling off, Mr. Richards, noting that pricier mortgages are thinning the pool of qualified buyers. Other rates on money lent to individuals like credit card interest are rising as well as this year, but few are climbing as fast as mortgages. Mortgage rates tend to follow closely the yield on the 10-year Treasury note, a practically risk-free government bond whose price reflects investors' guesses about economic growth and central bank policy over the next decade. Since January, inflation's persistence has convinced many investors that the Fed will act much more aggressive to rein in demand. In response, traders have sold off Treasury bonds this year, lifting yields, which rises when prices fall. On Thursday, the 10-year Treasury yield rose 0.12% percentage point to close at 2.808, a new high for the past year. That's up 1.5% rounded at the end of 2021. Mortgage rates have ascended in sync. The last time rates were near 5% was November 2018, when the 30-year average mortgage rate twice hit 4.94%. Freddie Mac data showed. This is not something that we ought to be jumping up and down. You need to be cautious. I'm speaking to my cautious now, my audience. My cautious audience, I hope, hopefully, are in there doing that. That's because it's not easy, and you have to be what the market is, what the home prices are, what the cost of the mortgage is. There's just a lot of things to get in your ruler and your desk and your adding machine, and be prepared for all these types of things. I can say that we put together, my wife and I did, over 2 years ago, and it was the sale of our house. It's what we did, and then we found a rental. We were in the rental for a year. We didn't like it much, but what we found is that with money in the bank, that we had the money in order to get out of the rental and then find a house that's lower before sky high again. So we're pleased. Nevertheless, think about these terms that people are asking and things that you'll pay, and be cool about it. And if you need some information, then you could write to me in terms of my email address. You can reach me at info@searchingforintegrity.com. One more time, that's info@searchingforintegrity.com. So for me, John Smith, I am the guy with the famous adios, and that adios. Glad you listeners tuned it in. I'm glad you listeners are listening to this information. It's very valuable. And I know that you're searching for integrity right now. So long and happy trails to all, until we meet again. Adios.